Welcome to this tutorial brought to you today by To The Tick. Today's topic is the double bottom reversal. Now, double bottom reversals happen frequently, very frequently. They are accurate as a trading pattern to identify. They're virtually seen in any stock, commodity, instrument you want to trade and in any time frame. So let's go through looking what a textbook perfect looking double bottom looks like, bar by bar. Before you can have a reverse, you've got to have a confirmed trend in which to have any kind of reverse. So our reference point today starts with the background with the bears in total control of trend and price action is down. You get your first swing low hold, you must have that, and you have enough interest to buy, it stops the decline of price. Basic definition of the term support. Is it just buy to cover, or is it truly somebody interested in this bouncing the price? Well, once they take out a bar or two, confirmation there that they are pushing it higher, and again, you don't know how high, but the conviction that comes in with these bars with that bounce tells you a lot about whether there's genuine potential buying interest or whether it's really just a bearish down move, a little bit of buy to cover, and everybody's still looking to take the short trade with the picture as we see it so far. It is a trending down trade short. So again, good money, perfect pattern we're looking on here now. Great money in that turn, and then we get the push all the way into the next double bottom reversal. Well, we really don't know anything at this particular moment in time other than the pattern has repeated. We have a solid swing that took back quite a bit of that bearish move in the background, and this one rolled right back down with the same velocity, and now here we are. Pause. Well, if I took the short trade, I'm thinking this is a good place to take some profits if we pause for too long. So this slows the activity a lot right here on this pattern, but basically this becomes the key. Do we see less selling and more buying? Do you see buying interest nibbling, or are they really starting to get some real control? And has the selling stopped? Is there enough buying interest to stop the decline? Definition of support. Our terms for the double bottom signals a potential change in trend when the bears are unable to penetrate that supported low a second time. And we successfully had the swing effort in between. So now the rules say we could potentially have a double bottom. So our first possibility, and again, this is our perfect scenario of what might happen next, is that the bulls in control again, and that the bulls go swinging back up again with the same velocity that they showed us on that first pull up. And now you're looking at what is a classic textbook perfect picture W pattern. Can you see that the bears create the W stroke on the left with that big O downtrend? We get a nice big strong pull up in the middle, which has a nice single swing with plenty of money to be had on both sides of that trade. Same thing on the way back down, plenty of money, nice and even symmetry, makes a nice looking double bottom, and then the reversal creates that big wide right hand side of our W, and it's a nice pretty pattern with good money in the pattern. We want to be able to break this perfect W down into its structure. We do that by doing our measured rule. Our measured rule takes the swing lows of the pattern and swing highs of the pattern. We're trying to see where was the real battleground between bulls and bears. And I choose to always draw my rectangles looking for the meat of the price action. So when you get a big thrust bar, I'm not going to look at that as true resistance. I think the resistance is back in here. So each trader gets to make these kind of nuances. But you're looking to see the money tradable is in here. Realizing that the dotted red line represents what I call the muddy trench, where they're fighting over whether they're buying or selling and buying and selling. And the reason that this looks so nice and aggressive on that first approach was because the sellers are, think about it, they're selling. They're trying to get the best price they can, and they've seen this price down here. And now they're having to let go of it up here because there's more buying, more buying, more buying, and the price gets pushed too far. This then sets up a nice short trade to be able to try that to reach for here, because you don't know that this is the low. We might make a whole new low, a whole nother platform lower. So that makes a real nice short trade to keep working with the trend. Trader options come from number one and most aggressive. Can you find a place to enter on the double bottom where you see that the selling has stopped and the buyers are taking control again? Notice how they did it on the left. A lot of times there's symmetry in these doubles to look to what happened on the left to see if those same traders do the same thing on the right. And that's option number one. You're going to use a real tight stop down here below the lowest low. Number two, a little bit less aggressive, but what I call the lav method, is to come to the muddy trench, the red dotted line, and watch that fight again between the bulls and the bears. Once the bulls take firm control and you can see it, take the trade here. Stop option would be under the muddy trench. Then you look at the breakout trade, classics, the third way to take the trade. Take the breakout trade itself. The fourth way is to wait for them to break it out and then pull back inside there. This one does not always happen, and that's the problem with the trade. But when it does, it has a very high statistical advantage. Every entry, your measurement is to trade and add this same box measurement, however you measured this box, and add it to and use that as your next target for it to double. Most textbooks will call that upper line the neckline, and you're looking for a neckline break. So when you see that, it's a breakout on upper resistance is what it is, and it's support on the bottom. Realize that if this does do what it's supposed to do, which is really change trend, then you're liable to have a great big trailing opportunity with the pattern as well. So if you miss out on one trade because it was a little too iffy and you didn't like it, there are four different options to trade this pattern. That makes it a real trader favorite. That third effort from this neckline to come down again might happen. Therefore, that's the reason why the most conservative entry is waiting for them to prove that, because false breakouts do happen. I offer plenty of opportunities about how to figure that out on the website. The symmetry of the pattern does happen quite often. It's all about who you trade with. Learn who you trade with and learn what your instrument looks like in volatility and volume. So let's go ahead now and very quickly look at a couple of other patterns. All of these patterns are considered double bottom patterns, every single one of them, different configurations. Notice that this one, I put this one on here because it was a big drop out of a gap. It was small and what I call punchy, very single pointed. It's still a big time frame. This was actually a weekly chart, but it's still punchy in the way that it looks in its appearance, and therefore the results were not quite as good. All of these patterns, let me say up front, did go on and do at least double what you see right here. I'm trying to focus just on the rectangle. So you can see that they don't just give you a bottom, and where is that bottom exactly? Did I have to wait for it? It took them a while to figure it out exactly where that bottom was. And again, on this side, same thing, except that thrust bar right before what I call the dump and run. They dump everything they have left, and then they scoop everything that they can get. Huge message in that move right there. How are those buyers in relationship to how much selling is happening at that moment of time? Huge decision. Here's one that's a little bit numerous bottoms for you, but it couldn't get through the top, couldn't get through the top, couldn't get through the top. So the pressure continues to be your trend and the background until proven otherwise. There is no double bottom in this pattern until they get through the upper resistance. Therefore, this is the only double bottom, and you won't know that until it confirms on this side of the trade. That's the whole point to trading reversals and counter trends. You're looking to get in before and see where the trend might actually turn. This again pushed higher in this chart. Lots of money, lots of time in here, but you got another option, and each time they continue to hold a little bit higher low, a little bit higher low, a little bit higher low. How do you trade that when it's not the exact same low price? Will you trade it when the right-hand side of your W is lower than the left-hand side? That's personally my favorite trade. Some people call these Adam and Eve. The single bars would be an Adam, and the group of bars in order to create their double bottom would be considered an Eve. And you've got multiple combinations, which happens first, Adam or Eve, Adam or Eve. But the bottom line is, when you understand the psychology of the buying and selling and changing hands of shares, you understand how these patterns work. Find your rectangles in all of them, and you'll be happy, because all of them will give you advantages if you actually either have the double bottom or a new breakdown. We also look at this as a tremendous nuance to give you a huge advantage when you go to a larger time frame chart as a reference, looking for a double bottom in a larger time frame and seeing it happen both in that time frame and the smaller charts and in this one on a major price line in a major area. So you can see the kind of results when you do play those. Extremely good money in these patterns, and let's go through it very quickly. It's a bearish trend background to start in order to even have that reversal, and we're looking to go long. First push into the new low tells you everything. Where are the buyers willing to step in and stop that price decline? Then what kind of buying do they do? Are they only covering their shorts, or are they strong, just profit taking, or some conviction in it? That swing high to low that first gets set up, now I might have the potential of a double bottom, and I might still have a great potential for that short with that trend trade. But either way, how much money's in the pattern will be this bottom rectangle. Our stop limits are always just under our entry options. Most aggressive, again, is that double bottom down on the swing low price. Next choice is Lav's option, work that muddy trench in your rectangle. And then classic is with the breakout, swing high price area. And finally, most conservative is the retest on the breakout price area once you've confirmed that they do intend to go that way. Thank you very much for attending today. I hope I have lots of great stuff for you over on To The Tick. Come join us. Bye for now.